Ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Happy Monday.
Yes, sir. Yes, sir. Happy Monday to you.
Time to rock and roll, my friend. Time to rock
Absolutely.
and roll. All right. So we got some things to cover here that I think will dispel some myths about getting into the market as a buyer.
Yeah, Bruce, I got to tell you, I do open houses sometimes over the weekend, and one of the big things that people come into the open houses, they're confused about, or they don't want to understand the process. But what is the difference between a pre-approval and a pre-qualification?
Well, that's a great question. There's a significant difference. The problem is that most people don't know the differences, and a realtor doesn't know the differences because the letters are written from the banks or mortgage companies in a way that it would be difficult for you to determine unless you physically vetted the lender. But a pre-qualification is a lender talking to a potential client, reviewing their credit, and asking them questions about their income and their assets. But there's no validation of any documents whatsoever. And I can tell you this much: people don't even know how much they make, let alone how much money they have. And the calculations that lenders use is different than what a client might think they make.
Sure.
A pre-approval letter is going to be validating it. So I've seen your credit, I've seen your income, I've got your pay stubs, I've got your W-2s, I have your bank statements, I know where the cash to close is, I've seen a divorce decree, I know how much you're paying for child support or any of that. And that's a pre-approval. And that's good enough to go out and shop for a home.
Okay. Now, I have found that there's different levels, honestly, of pre-approval, right? As far as I'm concerned.
Yes.
I see pre-approval letters come across that, when I dig in, because, I vet my lenders when I have a buyer on one of my listings.
You're smart.
And, yeah. Well, I've gotten burned, right? Or my sellers have gotten burned. So I learned my lessons.
And it hurts everybody when you have, an erroneous letter that's not worth the paper it's written.
Yeah, absolutely. And sometimes it's the lender being lazy, and sometimes it's the buyer being a liar, or whatever. So, or situations change. Heck, I had one that the guy didn't know he had a lien in Pennsylvania, and it was going to take him four weeks to clean it up because of COVID. This was back in COVID days, right? So you never know what you're going to find. But the pre-approvals that I see, and I think you do this, right? Pre-approvals that I see that are the best pre-approvals are where you're basically already underwritten.
Yeah, well, that is not done very frequently by most banks, mortgage companies, because it's an expense. The lender physically has to pay for the underwriting, and they run about $900 to underwrite a loan in this market. Right. But we do that. If we've got a buyer that we want to make a strong offer, then we want to eliminate any opportunity that the transaction could fall apart. So you have to remember that who's writing these pre-approval letters? The loan officer. Right. Loan officers can't approve loans. There's never been a loan officer that's ever signed off on a loan ever from any mortgage company. Underwriters underwrite and approve loans. So we'll physically take that all the documents, send it into underwriting prior to the client going out shopping. Then we come back. If there's any conditions, we solve the conditions, but the buyer's fully approved. That allows the buyer to make a stronger offer. So it also allows me to shorten the time frame that we need to close, because all I need is the appraisal and the title work.
Yeah. So, and I definitely, I've seen those kinds of letters come across from lenders before. And as a listing agent, that's my favorite. I love it when I get those. But, and as a buyer's agent, I love to have those kinds of buyers lined up. Right. But, frankly, most agents don't really think of those kinds of things. They're just happy to get an offer, or, they don't know how to dig into, to the lender.
Ask the hard questions. I strongly encourage any real estate agent to dig in deep. I actually teach a class called Interview with a Loan Officer, and it's not just interviewing me. What it is it's a series of questions that realtors can ask a lender to determine whether that pre-approval letter is written worth the paper it's written on. So when I fast track a loan, that means I've sent it into underwriting. I will guarantee the seller that I will pay them up to $500 per day for every day we miss the closing. Now, I don't know a lot of lenders that are going to do that.
Right.
And I wouldn't do that unless I saw all my clients' documents, because then I'm putting my money at risk.
Right.
But if you want to make a stronger offer, you have to position yourself as a buyer to appearing to be as close to a cash buyer as you can possibly be. And when the lender steps up and is willing to pay the seller if that deal were to fall apart, that really does add a lot to the negotiation.
Yeah, absolutely. I will say that, since you and I started working together, I haven't missed a loan yet. So
yeah, well, we haven't missed the closing yet.
We haven't missed the closing.
We're not going to do that. No. I don't, you know what, Tom, I don't typically miss closings. And listen, if I get any complaint from a client, it's that, boy, you asked for a lot of documents up front. Yeah. So I don't have to surprise you the week before closing. I don't want anything for chance. I want to make sure that when I tell my realtor or my client, you're good for this much money, you're good for that much money. So Let me ask you a question.
Shoot.
What do you do as a real estate professional when it comes to determining which offer to take when you've got, say you got 3 offers on the table? Sure. And 3 pre-approval letters?
Yeah, that's a great question. I mean, obviously, there's factors like price, terms, closing cost credits, right? The numbers side of it, which is important, right?
Of course.
But then we get into the softer side, I mean, clearly, and I know this may go against what you think, but if somebody's coming in cash with no contingencies, they're probably going to win. But that isn't happening very much anymore, right? So it's pretty much loans. The loan type may have a little bit of an impact, but for me, it's usually not, right? As a matter of fact, I love VA loans because being a veteran.
Thank you for that. Being a veteran yourself.
So I always encourage my sellers to seriously consider those, even though they've heard from others in the past that they're bad. So I have to talk people out of that a lot.
But before you go on from that, I want to just say this to everyone listening out there, particularly real estate agents. Don't discriminate against veterans. Just because they're putting 0 down doesn't mean the loan is less strong than a 20% down conventional. Tom is 100% right. It's not the type of the product, it's the type of the client. So Absolutely. What are you doing to vet the client?
Yeah, so that's the biggest thing I think and that's I think as a listing agent, that's probably one of my biggest differentiators is the fact that when I have an offer, I will vet that lender really hard, like we're going to get married, because for a little bit we are. And I'm going to ask them all kind of questions about the buyer, their qualifications, how much checking has been done. Like, have you actually gotten their transcripts for their taxes, assuming they're self-employed or something? Do you have pay stubs? How long have they been at the job that they're at? Sometimes I might even go a little too far and ask them what industry they're in, but the biggest one that
during COVID, that was important.
It was absolutely. So, but the biggest one that I ask, I think, is like, hey, if you're the lender, right? Give me your absolute best. What are the odds of this loan not closing?
Right.
And I say it that way. I don't ask them what the odds are of it closing, because they all, oh, that's going to be fine. Hey, what are the odds of this not closing? What's the one thing that could happen that's going to screw up this loan?
Yeah.
Because I want them to tell me
one thing that you're concerned about. Just one thing.
That's right. And and I
listen
to that lender's. I listen to that lender's answers. What they say is one thing. How they say it is another. And then the next thing I do is I vet the heck out of that lender's process. Where's your underwriting? Or is it all in-house? Are you brokering loans? If you're brokering loans, which I don't have a problem with, who is it with? Who's the real lender, right? Where's their underwriting? Because if it's in California, I'm going to miss a day. If it's in the Philippines, I'm going to miss a week. And that's all there is to it. And it's okay. I get it. I can understand that, and I can deal with that. I can set my seller up for success, even though I know in California we're always going to miss a day because they forget that we're on the East Coast. And if it's in the Philippines, we're going to miss a week because they just don't care. And so,
Well, I don't do any underwriting in California or the Philippines unless my branch in California, they use California.
Absolutely. I understand that. And again,
but I'll tell you what, asking those questions, when was the credit report pulled? What are their credit scores? Now, they don't have to answer that, but I would ask anyway. What are their scores? Which score are you using? What are their debt ratios? Have you run it DU? Are you going DU or LP? What type of loan does it have? When does the credit report expire? Are the pay stubs within the last 30 days? Right? Yeah. Have you put the loan in front of an underwriter? Have you got it signed off by an underwriter yet? Now, most lenders are going to say, no, an underwriter hadn't seen it, but I've got a 42 back end debt ratio and a 725 credit score. And yes, I've got every document. We should be good to go.
Yeah, for sure. So,
the things that'll sneak up on you are gifts. So it's interesting because is there a gift involved, or does the buyer have their own money? Because here's the tricky thing. Grandpa agreed to give me $5,000 towards my real estate transaction to cover some closing costs. Yep. But Grandpa is not going to share his personal bank statement with anybody. We could have a problem. Now, fortunately, conventional loans and FHA have done away with as much vetting of the donor. You still do have to have their bank statement. You still do have to have a gift letter, but you don't need as much documents anymore. But you still have to be an immediate relative. And I've had people go, I borrowed money from a friend of mine. It's a really good friend. I've known him for 20 years, and he's going to give me $50,000. Wait a minute. That's not a legitimate gift.
Yeah, exactly. So, we don't deal with those. I don't deal with those too often, but we do deal with them on occasion. And, I can tell you this, it's always best to have a lender that knows all the little ins and outs and is really intimate with their customer, right? As to what is going on in their life. And they're telling them, because, the worst thing that happens, Bruce, is the buyer comes rolling up to the closing in a brand new car.
Yeah.
Telling you about they just bought a bunch of furniture at Rooms to Go and they got, interest-free financing for 2 years, and that loan's not closing.
I have a document. I have an email that goes to the borrower every Tuesday during the loan process that says, don't do any of these things.
Yep.
And most of the time they won't. But some of them will come up and go, well, I didn't read that stuff. Okay. All right.
And we just had one of these recently. Fortunately, it ended up being okay, but he went ahead and paid off some extra credit card stuff that he didn't need to, and it kind of messed things up a little bit. Messed up his cash reserves, right? And
just communicate before you do anything. Just communicate, because a lot of people think, it's just going to make it better. I can pay off this debt, but I was using that money for reserves.
Exactly.
If you don't know that, it could throw an approval right off.
Yeah, absolutely.
Hey, listen, it's been great talking to you today. We covered a lot. If you are looking to buy or sell a home, Tom can operate in all 50 states. And if you're looking for a mortgage, you've got the largest retail lender right here in the country, Cross Country Mortgage. You just let the loan arranger know, and we can help you, whether it's a purchase, refinance, new construction, renovation loan, reverse mortgage, anything you need, we've got it right here.
All right, Bruce, great talking to you again. I will talk to you this week.
I look forward to it. Have a